Hello, everybody. Listen, today we're doing a head-to-head, and I want to talk to you guys about something that we don't always have here on the show. This is something unique, always important to rent to own, but not something that we always talk about. Right now, I'm talking to Thomas Murphy. Now, he's a managing member of one of the companies that I think is going to be super important to you. Now, Capital Concierge is something that you don't hear every day, what you need every day. And I'm so glad to have Thomas here. Thomas, how are you doing today?
I'm doing really good. Thank you for having me, sir.
Absolutely. So I know that everybody's wondering right now, we're talking about something that everybody needs a rent to own, but we haven't spilled the beans. What exactly is it that Capital Concierge does? And what do you offer to the rent to own industry?
Well, thank you for asking that. Capital Concierge is a business capital broker. In other words, we work with 50, 60 different lenders of all different types, depending on what the capital needs of the business is. And so what I do is when a client comes to me, I do kind of a soft interview with them. It's like, okay, how much are you looking for? I need, $400,000. Okay. What do you need it for? Is it for inventory? Is it for new trucks? Is it for a new location? Is it a partner buyout? So I'm going through peeling that onion back of trying to find out exactly what it is, because I have multiple lenders. And by having multiple lenders, I have certain lenders that are really good at this thing and certain lenders that are good at that thing. And so what I'm doing is peeling that onion back, interviewing the client and asking them what it is. I ask them questions about their personal financial situation. How's your credit score? Lenders are very risk adverse, and they're always, it drives me crazy, but a credit committee is always saying, when this thing goes south, how are we going to get our money back? And that's an important aspect of rent to own, and I can talk a little more about that. But again, what we're looking to do is I have a rent to own background. Don't know if you'd like for me to go into that a little bit, but
well, we do, because here's the thing: when we're talking about, and this is one of those times in the economy where everybody's like, I don't know what to do. Everything's getting expensive. Capital's gotten more expensive. Real estate has gotten more, everything's more expensive, but I've got to figure out what's right for me. And when you're talking to Thomas, he's got the ability to help you out, specifically tailored to rent to own. Now, I don't know if you guys know this, but when you go into a bank, if you go into a financial institution, rent to own is looked at a little bit differently because we handle business differently. Now, the RTO industry knows a lot about this, but you might not. And the truth is, we have a lot of big guys out there, but then you have the guys that are trying to build their brand. For instance, myself, I would love to build a brand, but capital is something that I don't know a lot about. How do you raise a capital and how do you go about that? Well, this is the opportunity for you guys to understand how it works and, more importantly, how to get it. So you do have a rent-to-own background where you understand how the day-to-day works before you got into Capital Concierge, correct?
yes, absolutely.
So where do we start? Where did you start?
Well, it started back in 1985. I was working in the jewelry business, wearing three-piece suits every day, and I was over on the east coast of Florida and down southeast, and I wanted to get back to where I'm from, the DeLand area, Daytona Beach area. And a good friend of mine that I went to high school with was working for Champion Rent to Own. It's based out of Daytona Beach. And he says, hey, well, we're looking for manager trainees. And I said, okay, well, what does that look like? And he says, come on and over and interview and what have you. I interviewed. They go, okay, you look like a strong candidate. We'd like to hire you. And I said, okay, well, again, what does that look like? Well, you start out as a delivery driver. I'm like, okay.
That's where you start. If you've been in this business, that's where you start.
I grew up in the furniture business when I was a teenager, working for a guy while I was going to high school and delivered furniture and appliances and what have you. So I felt very comfortable with that because I knew well to do. It was a little bit of a transition going from working in a jewelry store to back on a truck delivering appliances and picking up furniture and things like that. But it all worked out. I did that for about 6 months. They said, we'd like to promote you to a collector. At the time, Champion had, I want to say, I don't know, maybe 60, 70 stores at the time. So I became a collector, worked for a guy named Wendell, and he taught me the collection business. And, you know, I've been in sales pretty much all my life and grew up in a sales background. Father was a CEO or was a sales manager for a dairy company. And so in collections, it's a lot has to do with sales. Like, hey, I'm here to help you. Right now, you're past due on your payment. How can I help you? Give me something to work with. So I was able to actually close my book at a zero delinquency 1 week. And it was only 1 week, but I still say that was one of my, never will forget that. But working with customers in the rent to own business, you're providing a service that incorporates a product, right?
Yes.
They need a washer, but what you're really selling is weekly, bi-weekly, semi-monthly, or monthly payments, because you're making that affordable into the guy's budget. How does he get paid is when you want to collect your money. So I did the collections job for about 6 months, and then after that they promoted me to store manager. I'll never forget the district manager that promoted me is like, I don't think you can do it. You'd be our youngest manager in all the stores. I don't know, but I'm going to have to give you a shot. I was like, wow, thank you for that vote of confidence, sir. Anyway, I was the youngest store manager, and in a small town called DeLand. It was maybe 20,000 people, and which I went to high school there and what have you, so I knew the area very well. And again, I crushed it. I did.
So how long were you in this space of actually being in the rent to own as far as operations concerned?
First 3 years, I was driver, collector, and store manager, and did that for 3 years. They transferred me to Kissimmee. Decided that I was going to leave the company and start selling product back to the rent-own industry, still staying in the industry. I did that for about 2.5 years, and I was selling to Champion, based out of Daytona Beach. And the director of operations at the time says, we really need a buyer, and we think you would be really good at that. And what do you think? And at the time, the company I was working for, I wasn't doing exactly what I wanted to do and not making the money I wanted to make. And I just said, I'm willing to give it a shot. So I went back to Champion as their director of purchasing, merchandising, and service. At the time, they had about 100 stores, and was with them for 3 years as the director of purchasing, merchandising, service. By the way, I forgot to say that Larry Sutton was my mentor. He was a Champion affiliate partner over in the Tampa area, and Larry Sutton is a great guy, and I call him my rent-own mentor.
Well, he still has the moniker, the Godfather of rent-own, right?
Godfather of rent-own,
He's been
yes.
doing this so long, and I know that so many people look up to him. I had an opportunity to speak to him one time, probably not as much as you have, but great conversation. And I'll be honest with you, every time that I have a chance to see him or listen to him speak or whatever's going on, read about him, I have to take that opportunity because he has a wealth of knowledge and he loves this business.
He does.
It's something that I really enjoy, and so.
I got a little bit that'll tie the rest of this in if you let me finish.
Yeah, sure.
So in 1993, I was with them for 3 years again, 6 years total. In 1993, Transamerica was the big finance company for the rent-own industry. When I first started as a store manager, it was BorgWarner. Transamerica bought out BorgWarner. And in 1993, all of a sudden, I started getting purchase orders turned down. And I'm like, well, what's going on? I talked to the CFO at Champion, and come to find out, Transamerica was exiting the rent-own space.
Oh.
And so, which was an interesting time because at that point, so Champion started going out looking for money. And so they started going to the bankers and saying to the bankers like, well, we have a $6 or $8 million line with Transamerica, and we're looking for a replacement for that. And like, well, what do you do? It's like, well, we offer furniture and appliances and bedding and things like that. We work with a credit challenged customer, and the banker would stop and say, well, what? You work with credit challenged customers? And say, yes, sir. And the lender, the banker, would say, let me get this straight. You want me to loan money to you so you could loan it to somebody else that I wouldn't loan to? Yeah, you got it. Great. No, thank you. Here's a coffee mug. Thank you for coming in today. So Transamerica, when Transamerica exited, even though they said if we were going to keep anybody in the space, it would be Champion, but they said we have to exit the whole space. Shortly after that, there was a group of guys that bought a leftover portfolio from Transamerica called Texas Capital Bank. Texas Capital Bank, it was based out of, still is based out of Dallas, Texas. And at one time they had over $200 million out on the street to the rent-to-own industry.
Oh, wow.
For new store startups, inventory, all the different things like that. From what I understand, and it's from what I understand is that eventually the people wanted to sell the bank, and the acquiring banks didn't like the rent-to-own. The bankers kind of look at rent-to-own as a little bit of a, not a selective, not one of their more sought after
high risk.
business. High risk.
Yeah.
What they don't understand is the business owners tend to be blue collar millionaires. But they're dealing with a credit challenged customer, but they also know how to deal with a credit challenged customer by knowing that when is your payday? We need to make your pay. You get paid twice a week. We want you to pay twice a week, so that they know how to manage that cash flow. That's that providing a service that incorporates a product. The customer needs a washer, but they need that financial management situation where they can break that wash machine up into a affordable weekly, bi-weekly, semi-monthly,
well, affordable chunks.
Payment.
I mean,
More
we're dealing
affordable
with people that
Right.
are having situations in their lives where if they could go out and buy it, they would have. But instead, they're allowing us to at least to own it for payments on end, with depending on however it is, 52 weeks, 78 weeks, 24 months.
Exactly.
That they can own it eventually.
Exactly.
With the option to return. And I'm sure that plays a part in it as well. Not only the option to pay over 78 weeks over something that they probably wouldn't have been able to get credit on, but now they also have the option to return it, which means that you're not locked into getting that profitability. They do have the option to return it, and then you'd have to sell it to somebody else. Does that scare a lot of lenders when you're talking about, getting capital?
Well, you start talking to lenders, and they start dissecting the business, and they want to learn more about it. And then when you start talking to a lender, the fact is that the balance on rent, which is all the remaining weekly, bi-weekly, semi-monthly, or monthly payments due, is called the balance on rent. Most stores, average store, 500 accounts, will have $1.5 million, $1.6 million, or whatever remaining balance on lease. But for GAAP purposes, the accounting purposes, they don't recognize that on the balance sheet. And so bankers' balance sheets are one of their, it's like, the standard issue 3-piece suit for a banker, and he understands a balance sheet. So when you start talking about rent-own and the fact that the customer can return the product at any time and stop the financial obligation, it's like, well, wait a minute, how does that work? Well, there's a thing
How
called
do we
a
make
keep
money
rate.
off of that, right?
There's a keep rate in the industry, somewhere averages in the 50 percentile, whatever it means. Out of 100 people that come into the store, 50 of them will retain ownership by paying it off. The other 50 are going to return it because they couldn't afford it, they don't need it anymore, and things like that. And so rent-to-own is the king of recycling product.
Yes.
I've taken pressure washers to sofas and chairs that were really in bad shape, and amazingly they come out beautiful. So the bottom line is that as you start talking to a banker like that doesn't compute in his head. He doesn't understand it. One of the values of Capital Concierge, because of my rent-to-own background, I also owned a lease-to-own company, which is like creating a virtual rent-to-own store and a furniture store. There's many of them out there now, like Progressive and what have you. But the bottom line is that being able to talk to a banker and explain to them how it works and what happens in case of default and the different things like that, I've been able to tee up lenders that understand the rent-to-own business, and I've done a ton of deals with them, and they've all worked out fine. So I get a certain amount of respect with the lenders that I work with because I understand the business, and I understand talking to the dealer and what he's going through. So I'm like a go-between, right? The banker, I have multiple lenders, and I have a client. Like I was telling you before, is that when I speak to a client, and client will tell me like, okay, I need XYZ. Like, how much money are you looking for? What do you need it for? Is it a partner buyout? Is it a new location? Is it a need inventory money? All the different things. So I have different lenders that I interview that client and then decide where's the best place to take it. The nice thing about Capital Concierge is that if you come to me and I present you to one particular lender and that lender says no, I've got other lenders.
So you're basically a one-stop shop for somebody who needs capital for the rent-to-own industry specifically.
Right.
So let's say I wanted to go and I wanted to open up my own business. I can call you up. I mean, I have the operational knowledge. I understand how to rent weekly, bi-weekly, semi-monthly, monthly. I know how to pay bills, But getting it open, that requires capital, right? I have to find a building or I have to find a lease space. I have to get trucks available. I have to make sure that I have a certain amount of capital away so that I can pay my labor for such amount of time. I have to find product and talk to vendors and say, hey, I need this much product, at start, and I'll probably be ordering from then on. And then instead of going everywhere for all those, I have the ability to come to you. We can discuss numbers because you understand what it takes to open and what is a good amount for what I'm looking for. And then shop those around and find the best deal for the both of us, right? Something that you can say is presentable and something I can say I can afford.
Well, I work with several different rent-to-own franchise companies, and because they know I understand the rent-to-own business, there may be a store manager out there that's been a store manager for 10 years, and he's like, you know what, I'm ready to be an entrepreneur now. And so they'll go to the franchisee, they'll share with them the franchise disclosure document that'll show some estimated costs to start up and things like that. And then he's like, well, wow, I didn't realize it was quite that expensive. I don't know that I have the capital for that. And it's like, well, we work with a gentleman named Tom Murphy with Capital Concierge. I do a fair amount of SBA loans, SBA 7A loans. Without real estate, it's a 10-year term, no prepayment penalty. The nice thing about the SBA is that the government guarantees that loan by 75%. So what's nice about it is you'll go to a lender. The bank is loaning you the money for the funds, but if they're a preferred lender, then they can approve you, and in case of default, then their exposure is only 25% of that loan. So if it's $1 million loan, the most that they can lose is $250,000. What that does is it gives the banker more confidence in maybe taking a deal maybe they wouldn't do on their own as a commercial lender. But with that SBA loan, at the SBA deal, it gives them more confidence. So, young gentleman, he wants to be an entrepreneur. He understands the rent-to-own business, and he's like, so what does that look like? So one of the things that I developed is what I call a kind of a pre-qualification run, where I'll ask him some questions about his personal credit score, his personal net worth, his available available cash, different things like that. So one of the lenders that I do quite a bit of rent-to-own business with, typical SBA is prime rate, which is currently 8.5%. Typically the markup is 2.75. I have the one lender that'll go 2.25, which is 0.5% off of the rate, which can make a pretty big difference after 10 years. They'll also lay a revolving line of credit alongside that SBA loan. So in other words, if they need a $1.3 million to say $1 million for ease of math to open it up, it's a 20% equity infusion. So that's $200,000. They typically like for you to have a little more in your bank account in case things get in trouble. They know you got a little runway, but then they'll also lay $50,000, $75,000, $100,000 revolver alongside of that. So what I tell, when I was at Champion, I was on the new store startup team, if you will. So we were opening a ton of stores at the time. You get one store that comes out of the gate really hard. And so I say that a new store eats like 5 existing stores as far as inventory wise.
Yes.
And so in other words, what you've got to make sure is you've got the capital to feed the beast. That thing comes out of the gate really hard. You got to make sure you got the cash, because the last thing you want to do is run out of cash and not be able to buy the inventory that ultimately they say in the industry, getting to 500 accounts is the big goal, because at that point you start cash flowing, your fixed expenses are covered, and you start to break out.
And in order to do that, you have to have the capital to go to your vendors, to go where you need to go and say, hey, I need more product. This is selling good. This is not selling good. So I'm going to buy more of this, not more of that. And then before you know it, you have another showroom, and hopefully you're going to sell through that quite a few times because you're trying to get to that mark, which makes the tough.
I'm sorry to interrupt you.
It just makes it tough if you don't understand how that works, because the capital needed is to refill your showroom every single time you sell through it. And if you're selling 500 BOR, that's quite a bit.
Well, two, what you run into is a huge cash deficit when you open a rent-to-own store. Okay, maybe you'll sell a little bit of retail here and there, but that's not the game that we're in. So in the rent-to-own business, you say your average cost of goods, what, $400 these days? And then so you buy a piece of product for $400, a customer comes in and let's say it's a washer and dryer pair. Okay. Let's say you get you give them a deal for the first week, you get $10. Okay. You spent 400 and you just took in $10. You got a $390 deficit right out of the get-go.
And that's right, just getting even. That's not any profitability. That's just getting your product cost back.
Correct. And so when I work with rent-owned dealers, especially because of my background, we spend a lot of time talking about projections and business plans. Absolutely. Business plans is pretty much, your plan, but more importantly, the projections of being able to make sure that you've got your cost of capital covered, your rent covered, your pay factor covered, your trucks, all the inventory, things like that. And so, and that's some of the things that the confidence that comes from the lenders that I work with, knowing that I'm helping them along.
Well, you're operation savvy.
The nice thing about this too is that most of the SBA lenders I work with pay me a referral fee. So my cost to the client is covered by the lender.
Oh, that's great to hear.
So I'm working for free, so to speak, but that also puts me in it to win it with them from a standpoint of I'm in it to win it. Their success is my success. So I get that loan across the goal line. I get them all squared away. They close the loan. I get a little referral fee.
So let me ask you a question, because everybody right now is talking about how things cost more. That's just part of life. And, inflation happens. Unfortunately, inflation's happened a little bit more recently, but it's going on. So what, in a simple world, we try to keep it as simple as possible because I know there's a lot more to it. If I was to come to you and say, hey, I'm looking to open a rent-to-own location, what is the general cost for a location now where you can say this is probably a safe number that you'd want to get started with?
A lot has to do with the demographics from a standpoint. Are you in a small town? Are you in a medium-sized town? At what kind of competition? You're better to be a big fish in a small pond, so to speak, right? Okay. And so at Champion, we were always we went to Atlanta, but we never went inside the perimeter. We were on the outside of these smaller towns or whatever like that. So work with one particular franchise location, franchise, or that, typically a startup store is $600,000.
Is it 6 now? The magical number that I always heard coming up through the ranks was 500.
Well, again, talking about the prices going up, different things like that. So typically they want to have a core base of 600. And an SBA loan, an SBA lender is going to look for 20% equity in that situation. They also like for you to have another 10% of that loan amount is in personal runway in case, maybe the thing ramped harder than expected, or maybe it ramped slower than expected. So now you've got a longer time before you get to that magic number of 500 accounts. So, a lot of what I do is spend time with the client and, what are your expectations and are you prepared? Do you have other access to cash? Because, I've had franchise ease come in and say, I don't think I need 600,000. I think I can do it for 450,000. And it's like, okay, what happens if that thing comes out of the gate really hard? And because basically we break down on the FDD, for example, on a franchise, it'll say you need so much for the trucks. You need so much for your initial showroom inventory. You need your back stock. You need your computers, your counters, and signage and all the different things like that. So we break those buckets down into what we call a sources and use form. So here's all the things that you have uses for, and here's excuse me, here's the sources of where that money is going to come from. So, and then I always tell them you need a contingency plan of the unexpected, if you will.
So now cutting into this, because that was a really broad question. How do I open one up? And you're saying, it costs this much because there's so much involved in that. But then you had said earlier, it's also possible to dissect it and say, I need this for vehicles. I need this for a buyout. I need this for just furniture or let's say product. Someone can do that as well. So it's not just for somebody who's looking to open up their own brand, their own store and in the RTO industry. It could be for somebody who's already open saying, hey, I need capital for a specific item or a specific thing. I need it for vehicles because I need new vehicles or new vehicle wrap. I need it for more furniture. I need it because I'm running out of space. I know that I can do more business, but I need to lease somewhere else. I need more floor space. And so I'm going to need some capital for that because now I've got a build out only for build out, though I don't need it for everything else because I kind of have everything else. I have my brand name. I'm copyrighted. I have all that. So, or trademarked. But now I just need it for this. So they can still come to you, Thomas, and say, hey, this is my specific goal with RTO in mind. And you can still go into it and say, let's take care of it this way.
If it's an existing dealer and he's 2 years or older, business wise, and has a FICO score of say 700, maybe a little less, but preferably a little more, I have a special, what I call an express line that's up to $150,000 that I can close in as little as 2 weeks.
Oh, wow.
So it's up to $150,000 on a 10-year term, no prepayment penalty. So if he's like, look, I want to move into a new space, it's bigger, I'm going to need a little more inventory, but I've already got 450 accounts. But going to need new signage and probably going to need another box truck, and those things
Absolutely.
are not inexpensive by any stretch of imagination. But what's nice is that if he doesn't feel like he needs 150, he only needs 95 or 100. We can do those, and it's an affordable payment over a 10-year term. The key to that is it's no prepayment penalty. So he gets a year down the road and he's got into the new location and he's grown his accounts by 200 and he's really cash flowing great. He can pay that thing off early and stop the interest rate. So that's part of that whole interview process where we're trying to dissect what the guy really needs and what he really wants to do. Because, I almost like a consultant for being able to say, did you think about this? Did you think about that? Did you, maybe you need to plan for this or what have you. So, most people, when they come up with a plan, maybe they didn't think about all the points that they need to. So I try to dialogue with them to let's uncover let's left no stone unturned to make sure that you said you wanted 100, but based on what you told me, and we've started that bucket. We started building, okay, we need so much for this and so much for that and so much for this and so much for that. So part of what I am is a salesperson to the bank. So in other words, you come in and you want to open a new store and I get all your information. I'm helping you build the story that goes to the banker, because what the banker is, he's the salesperson to the credit committee. So we do a really good job at selling the banker on you, your background, your personal financial situation, all the different things like that. So we build that story. I call myself a storyteller. But part of that storytelling is being able to understand, one, how to communicate with the client, but two, also know what that banker's looking for. What kind of points do we need to make sure that we hit? And sometimes maybe a client's a little bit softer on one of those points that we need to make to the banker, but he's also stronger on multiple. So my job is to sell the banker, and then the banker's job is to sell the credit committee on why this loan makes sense and how this gentleman will be successful and different things like that. So,
absolutely. So what you're doing is making sure that whoever is in the need of capital, they're not just walking in and saying anything to anybody. They've got you to prep them, sit down and talk with them and say, hey, these are the cases, these are the things that they're looking at. These are the touch points that somebody in this situation is going to be looking at. And so what you want to do is be ready for those situations by doing this, saying this, and you want to bolster up exactly what's going on, but you want to put it in a way where they understand you're okay. You might not understand everything right now, but let's sit down and we'll talk about it. So at the end of this, when we do go in to talk to the bank or whatever loan institution there is, they feel as comfortable with you as I do. And that's how you make it work from Capital Concierge.
And part of what I started to say is that when I get a client, I do basically an interview. And then what I tell them is that I'm going to send you a personal financial statement and a resume. And a resume is not something that you would go find a job with, but it's more like I worked here and I did this, and that's showing the rent to own experience. So, and then on the personal financial statement, oftentimes they don't fill them out right, so it's like, okay, so that's coming to me. I'm getting that information. I'm reviewing it with them. It's like, hey, I think this is the wrong spot. This over here. By the way, do you have any home furnishings, and do you have any jewelry? Do you blah, blah, blah? Okay, we need to put that on there as assets. What we're doing is we're building that story.
building it.
And so that I'm looking at it before it goes to the banker. I made a mistake early on in my career at Capital Concierge where I sent all these forms to a gentleman, asked him to fill them out, and never looked at them. Hit the forward button to an email, and the lender calls me and says, "Tom, did you look at all this at all? This makes absolutely no sense. There's no way this guy's going to get a loan." And I'm like, wait. And then after going back to him, he filled it out wrong, but I made the mistake. It was one of my first deals. I just hit the forward button, sent him all the information to fill out. I hit the forward button and it wasn't. So again, I am part of Capital Concierge is being able to build that story, build a story, tell the story, make sure it's clear, and accentuate the positives. And not that I would ever hide anything from a lender from an integrity standpoint. But in other words, when we're building that story, we're telling that story, we're going to obviously accentuate the positives the best we can.
But we got to see it on the right light. I mean, when you're doing that, you don't want somebody to always say, hey, there's a lot of risk, there's a lot of challenge, there's a lot of adversity going on, and not see what we have to offer on the other end. We're doing this a long time. Yes, the product comes back, but we also refurbish it, we take care of it, we also put it back out. And it's a possibility that even though we had this amount that we were going to set for it, if we really take care of it, we really refurbish it, we put it out there, we could actually make more than those margins that we expected.
I remember when I was a store manager looking at, now I'm really going to date myself, perpetuals, which is basically, it was all of a paper scenario
right
before we went computerized. Rent-to-own industry is experts at recycling product, touching up the wood and cleaning it up and making it look as presentable as possible. And the nice thing about it is on a pre-rented unit, they discount the term, they don't discount the payment. Right. So if it did cycle out and go out for 3 months and come back, they didn't lose any revenue because they didn't discount the rental rate. They discounted the term on it. So it's I think it's a phenomenal business and it's got some bad press in the past and people like to say you're taking advantage of poor people and what have you. At Champion, I was fortunate enough to be a part of focus groups where they bring in customers. And I never forget this one lady, they had it, we were behind the glass where they couldn't see us, and the moderator's asking this lady, is like, well, Mrs. Jones, we see that you have a Whirlpool washer and dryer here. Yes, I do. And that's $34 a week, what have you, whatever the number was back then. And it's yes, ma'am. Okay. And the moderator said, Mrs. Jones, do you realize that you're going to pay twice as much for that washer and dryer pair from Champion than if you went and paid retail for it? And the lady says, listen, honey, I'm a single mom with 3 kids. I got 2 jobs. I'm not dragging my kids down the laundromat at 11 o'clock at night. And one of these days, that Whirlpool washer and dryer is going to be mine. I know what I'm doing. Don't insult me. And that
good for her.
That kind of changed my life.
Well, I mean, it's one of those things, like, I think that a lot of people see it just from a monetary standpoint, right? They say, if I was to walk into some place and I gave you money, I should get this. Okay, granted. When has that ever happened? When's the last time that you went to any furniture dealer and you just put money down and you didn't have to worry about delivery? You don't worry about warranty. You don't worry about how long it's going to last you. You're going to make all of this payment at one time, or are you putting it on a credit card? Because it's one of those things like, if you don't understand it, then you don't know it. It's easy to say that. Sure, I could pull out a credit card and I can just pay it, or I could do it in just cash. And then what am I not paying because I'm doing it by that, right? Some people say, well, it's easier to pay in cash. Well, if all of us had cash, we would just be doing cash transactions. Credit would be nowhere be found, right? We wouldn't have things like Progressive where you can buy it that way.
People buy payments.
Well, that's the thing, is that people settle on the payments because that's what they can afford. It's easy to say, hey, I have my whole check and I'm going to take my whole check and put it on my sofa. That's beautiful. And if you can do that, that's great. But guess what doesn't get paid? Now you got a phone bill. Now you got a car bill. Now you got insurance. Now you got water. You got light. So if you had that ability, it would be easier. We wouldn't have these programs. And then on the other side of that is, when somebody puts it on credit, the first thing you see is what you bought. I bought it for $7.99. Taxes, it comes to $8.60, whatever the case is. I see $8.60. What you don't see is when you make that $25 payment or that $40 payment, it doesn't go down to $8.20. It'll go down to $8.59, and $39 is going to go towards whatever interest rate that you're paying. Okay, So it doesn't look like it because you're not seeing all of it. Now, as you go down the line in adverse situations compared to rent to own, where you can say, this is your balance. This is what you're buying, but this is your balance. You have 78 weeks at this payment, and this is what the cost is. And as you come down, this is what it's going to be. And you probably have an early purchase option where you can pay it off for less. Well, guess what? Your credit card is going to say, this is your statement. It doesn't look like it's going to be any different. Next month, it doesn't look much different. Next month, it doesn't look much different. It goes down a little bit and a little bit. The only time that you're really going to see big chunks is when you're down into the last 10%. How much have you spent? Well, I don't really know. But you know what? Your rent-to-own agreement tells you what you're going to spend. Your rent-to-own agreement tells you that I'm not only going to do that for you, I'm going to deliver it for you. I'm going to service it for you. I'm going to take care of it for you. And you know what? If you refer somebody to me, I'm probably going to help you with the price. You can do that with your credit card company all you want to, but it doesn't make a difference.
I got another story for you. I got transferred to Kissimmee, which is out by Disney, what have you. And this lady would come in every week and she would open her wallet out and she had, I don't know, 6 accounts. And she's paying us like $220 every week.
Wow.
And I noticed that she had American Express Gold Card in her wallet. And every week she'd come in. You know, when you're in a rent-own store, you get to know your customers.
Well, you build relationships
and build the relationships. And after about the 4th week, I couldn't take it anymore. I said, ma'am, I have to ask you a question. And it's probably the most stupidest thing I've ever done in my life. She's like, well, what's that, Tom? It's like, you come in here, you have a history. You have done 20 some accounts. And now our kids are getting older. So now she's getting a new bedroom suit for herself because she's passing that one down to her children that are about to move out.
Right.
And I said, I've got to ask you, you got American Express Gold Card in your wallet. Why are you renting to own? And she says, Tom, let me ask you a question now. What would you do if I called you up here? What time do you close tonight? 7 o'clock. What would you do if I called you at 6:59 tonight and told you my refrigerator's not working? Well, I'd load you up a refrigerator in the van and I'd bring it out myself. He said, you just answered your own question.
You can't find that anywhere else.
I'm here for the service. I know that I know I'm paying a little more for it, but you guys take care of me. Anytime I've got a problem, you guys take care of me.
Well, that just speaks monuments to the RTO industry. And that's one of those things where I really would like to say there are people out there, there are young-minded people who are hungry, entrepreneurs that are ready to kind of make that jump and say, hey, you know what? I've seen enough rent-a-centers. I've seen enough errands. I've seen enough of the big guys. I want to open a brand too. I want to put my stamp on the RTO industry and enjoy this space along with everybody else. And so I see Capital Concierge as a way to get that done. So how did you end up there? You're in the business. You're doing operations for a long time. What made you decide, I want to fund the RTO industry?
Well, as I told you, I owned a company called YouOwn, which is still in existence, which is basically what I call a virtual rent-own. We'd go to retailers and for their credit challenge customers when they got turned down for the 5-year no interest President's Day sale, and we would be an option for them. As I'm working with all these furniture stores throughout the United States, you know, they're always saying, I need you to pay me as quick as possible because, I need money. And I kept hearing that over and over and over again of how, you got to pay me quick because pay me as soon as you can because I need cash flow to go out and buy some more inventory. And so after hearing all this, I didn't grow up, I'm not a banker. I didn't grow up with a finance degree or anything like that. Went to college, but I didn't have a finance degree. But at the end of the day, I was like, there's all these dealers out there that are needing money, and I'd like to try to figure that out. And credit card processing and all the different financial services. I offer other financial services along just besides capital lending. But at the end of the day,
you saw a need and you decided to fill it.
I decided to fill it. Sometimes along the way I've questioned did I make a great decision or was it, but at the end of the day, I enjoy helping people. And that may sound corny, but I know more about how not to find lenders and how not to find capital for people than I do probably know how to, but because it was challenging. And as there was more of a need, in the rent own space, again, you're dealing with a single store operator, a multi-store operator. What I found from a marketing standpoint is that I do what I call spider web marketing. I help the guy that has one store because goes fishing with a guy that's got three stores, that sets on the trib board or an APRO board that's got 10 stores or whatever. And so I know that if I help a small guy out, and if you go to my website, capitalconcierge.com, you'll see recommendations on there like, Tom really spent time with me, understood what I needed, and helped me get done what I needed to get done. And to me, yes, we all need money to pay for our groceries and what have you like that. But I really do enjoy helping people. I really do.
So you guys got to understand, going through the RTO world, I come across Tom's booth, and it was really interesting to see, because in this situation, like I said, there's not a lot of people pushing this instance. I've got people pushing furniture and different rugs, and hey, this is a new GPS software for your whatever, and your drivers, and as you're going through, I think you were really the only one there with that mindset.
For the last, to my knowledge, the last I don't know, 6 or 7 years, I've never seen anybody that would what I consider I also work as a business development for a debt buyer. So when rent-owned stores have these charge-off accounts that just set in their filing cabinet that don't generate cash, I have a debt buyer that can buy those charge-off accounts and turn it into cash. Is another way for that company to gain capital.
Now so you're turning out to be a guy of many traits here, many hats, and so. When you were talking about an SBA 7 loan, and you're talking about a quick express loan, it sounds like you have an arsenal of different things that somebody can use to get funded for different situations.
I do.
How many different loans are there available so that somebody can say, hey, you know what, you probably do have something tailored to me?
Well, again, we go back to the client interview onboarding processes, if you will. I'm a trib vendor as well as a nationwide member vendor as well, but I put out a loan recap, depending on what your situation is. Do you have an 800 plus FICO score? How's your net worth? I'm always asking questions and part of that sometimes can feel a little intrusive to some people or what have you. But at the end, do you have any charge-offs? Do you have any bankruptcies in your past? Things like that. But what I'm doing is I'm putting all the puzzle pieces together in my mind as I ask you. I'm clicking through lenders and saying, okay, let's see, nope, can't go to that guy. He just said this. But I've got bank financing that if it's somebody that's an 800 plus FICO score, I can get them bank rates, or basically prime rates, which is currently 8.5. We're hoping the feds are going to drop at 50 basis points, which is a half a point sometime late September.
Let's see. We're hoping.
But in other words, but I've got things that go down like the express line for up to $150,000. That's what I call light documents. SBA can be a pain sometimes, depending on what it is that you need, how much you need, and your circumstances. I've even got a process for someone that's needing a sizable amount of money, but has a high debt to income ratio on their personal credit. I've got a process that can help them pay off their existing personal lines to get their personal credit score up. And then once they qualify for the loan, then that process is paid back. It's called I call it the revolving balance advance program. So I'm trying to figure out ways of how I can help people. One of the things that I have found in this space is that there's a thing called merchant cash advance, which I relate it to a payday loan for a consumer. And those things can be a wheel that you get on. It's just really hard to get off because it's just like a payday loan for a consumer. And so I try to do everything in my power not to do that. If a guy comes to me and said, I need $50,000, I need it really quick. But I also explain to them that it's a very high APR. It's an advance on your receivables. So they don't call it an APR, much like in the rent-own business. There's no APR in rent-own. There's lease fees. So
Correct.
this is an advance fees. But I ran across rent-own dealers that'll call me and go, man, I've got 5 MCA loans and they take weekly payments out of my account because it's an advance and it's crushing me. Can you help me? I was like, oh man, I hate to see that. Let me see what I can do. So, and I've talked to some clients that are in some trouble, so to speak, with MCA loans. It's like, let's develop a plan. I can't help you right now, but I can tell you what you can do to get yourself in the best place where I can help you. So I do a lot of pro bono work, I guess is the best way to say it. But at the end of the day, I believe that my reputation is one of my strongest, what I hold near and dear to my heart. And I would never want somebody to say that Tom Murphy steered me wrong. So,
well, I mean, you've got what you said was 85, I believe. You said you started in 85?
In the rent-own business, 1985.
So you've been in the business a long time. You've probably seen a lot more than some other people have seen. You've seen both sides of the fence, from the vendor side, from the buying side, from the operations side, now from the capital side. You're offering a lot of different sources of knowledge to get somebody funded for a lot of different things that they need in the RTO industry, which is absolutely amazing. And if you guys want to know more about it, Tom, how can they find you?
Capital Concierge with an S .com is my website. I am a Trib vendor. I'm a nationwide member that has Rent Direct as well. I
did see an 800 number on there as well, right?
Yes. 800-897-1409. My email address is tmurphy@Capital Concierge with an S. I didn't realize how difficult concierge was to spell when I came up with the name. I love the name, but in other words, it's one of those weird spelling names. Concierge, Concierges. Some people leave off the S off of the concierge because we're multiple people, so we made it plural. So, but I'm truly here to help. If you've got any of your listeners have questions that they just want to ask me a question, I'm here. I'm here to help in any way I can.
You've got the information to reach out to Tom, but if you have a question and you want to ask the show, or if you want to ask the show so that we can bring it up in a later conversation, or so that we can bring it up to Tom, feel free to hit me up at pete@the RTOshowpodcast.com. That's our email. But as always, you can always find us online. You can find us on Facebook, Instagram, LinkedIn, and of course now YouTube. Look us up anywhere you want to, the RTO Show Podcast. We're everywhere that you want to be. Also, make sure that as you're doing this, you let somebody know, hey, do you need anything? Do you need any capital? Do you need anything that's going on right now, especially to our dealers that have 1, 2, 3 stores? They might be in a crunch right now. And this is one of the most important times that we've got to get through, because listen, RTO industry is super needed in America right now. And if they can make it through these hard times, that'll be set up prime time for when the economy kicks back in. And hopefully in a couple of months, that's exactly what's going to happen. Regardless of which way you pitch, I want you guys to know that we're rooting for the RTO industry, and that's why Tom's here, because listen, there's nothing more important than capital when it comes to making your business run. So if you guys, again, have any questions, please feel free to hit us up. That's pete@the RTOshowpodcast.com. You can hit me up online as well at the RTOshowpodcast.com. That's the website. You can see us here. You're also going to see this interaction here on our videos as well as on YouTube. And Tom, I can tell you, I really appreciate having you on the show, because out of everything that we do talk about, whether it's operations, whether it's collections, whether it's sales, we seldom talk about the background. And it's so important to know that we have somebody out there who's helping us out and funding this so that we can make it happen. So, guys, we appreciate your time, and I will tell you as always, get your collections low to get your sales high. Have a great one.
Thank you.